Headlines. Third quarter GDP numbers in the US are revised downwards from 5.2% to 4.9%. That's ahead of a crucial inflation data point that will be released later today. Separately, jobless claims in the US last week rise less than forecast. US equities gain overnight and are in fact on the cusp of an 8-week winning streak, which will be the longest in 5 years. Oil prices slip as Angola leaves the OPEC over production quota disputes. The move will shrink the cartel to 12 nations at a time when it's struggling to shore up crude prices. The government grants a one-time exemption to LIC for achieving a minimum 25% public shareholding by May 2032. The Department of Economic Affairs cites public interest for its decision to grant the exemption for 10 years. India is on the cusp of takeoff, according to Prime Minister Narendra Modi. He says this in a rare interview. He says, and I quote, "The people of India have very different aspirations from the ones that they had 10 years back," unquote. Now, equity markets in the US gained overnight and are, in fact, on the cusp of an 8-week gaining streak. That's according to Bloomberg, the longest in as many as 5 years. Yesterday's rise came as the GDP growth in the US was revised downward for the third quarter to 4.9% from 5.2% in the Commerce Department's final report. It's another instance of good news, or rather, it's another instance of bad news is good news as expectations of rate cuts build. The GDP number is an important update ahead of the data to be released later today on inflation. One of the Fed's preferred indicators of inflation, that is the Personal Consumption Expenditures Index, is expected to have risen only about 0.1% in November from October, which means that it is close to its target. Meanwhile, initial applications for US unemployment insurance rose last week by less than forecast, remaining near historic lows and indicating that the labor market remains resilient as companies seek to retain employees. That's according to Bloomberg. First-time claims for benefits rose by 2,000 to 205,000 in the week ended the 16th of December, and recurring claims were largely unchanged in the week ending the 6th of December. Now, before we turn to the equity markets in India, there's an update that is important for the money markets, that is the bond markets. The Reserve Bank of India will conduct a 7-day variable rate repo auction for 1.75 lakh crore rupees in order to provide a cushion to banks in the wake of the goods and services tax outflows. The liquidity in the system has tightened significantly over the past couple of months, and that's due to demand for currency during the festive season and also the RBI's actions in the foreign exchange market and tax payments. As of the 20th of December, according to the RBI's latest data, the liquidity deficit stood at 1.11 lakh crore rupees. Now, I've also been watching the yield on the 10-year benchmark very closely, and in tandem with global bond yields, it has come off over the last couple of weeks. And in fact, as of now, it stands at very close to 7.18%. That's for the 10-year benchmark government bond. Now let's turn to the equity markets and get you the latest cues from the F&O space and what to take after the weekly expiry. Agam is standing by to break down those cues for you. Morning, Agam. How do we end the weekend? This is before a long weekend and a curtailed week next week?
Yes, Alex, there has been a little bit of relief for all those who are longs in the markets. Yesterday, we saw a bout of short covering, which is evident in the index futures. The Nifty saw a decline of around 8% in open interest, even as the index advanced by 0.5%. And a lot of the short covering did come through in the latter half of the trading session. It was the same for the Bank Nifty futures as well, where we did see a decline of nearly 4% in OI, even as the underlying advanced by a little over 0.8 of a percentage point, with the Nifty, the Bank Nifty, moving back towards the mark of 48,000. The question is that are we going to expect a little bit of consolidation as we move into the truncated week upcoming? But let's talk about the options space at the moment and see how things are stacking up for the Nifty. on expected lines perhaps, we are expecting the Nifty to be range bound. At the 500-point range is what we are looking at based on open interest in the puts around 21,000 and 21,500, where we've seen a substantial accumulation in calls. In terms of changes in OI as well, as far as yesterday is concerned, we saw a lot more activity around the put side, and that's naturally because we saw the benchmarks move higher. Let's talk about stocks then. And in terms of stocks which are in focus today, we did see a lot of longs coming through in Coromandel, LTIM, GMR, Airports, IRCTC, and Shree Cement. All of them are seeing an advance. In terms of stocks which saw unwinding as well, at least most of them did move up. Their underlying moved up even as they shed OI towards short covering. So PI Industries, Aarti Industries, Aisha and BHEL seeing shorts, with Bajaj Auto as the only exception, which in fact did see longs unwind. Alex, today may be a trending day, but over the course of the next few days, we're expecting consolidation to come through. All
right. Thanks so much, Agam, for bringing us those details. Now, an important update for the retail space, and in fact, India's retail sales grew by 7% in October to November, and that compares with the same period last year. But the growth has been stuck in a range of 6 to 9% for the entire year. We're joined by Sesha, who's done a little bit of analysis of this to tell you why that is. Sesha, morning. What can you tell us about this latest print and the context here?
Right, Alex. So we have seen that the monthly report from the Retailers Association of India, which is the apex body for organized retailers, suggests that the retailers were expecting a double-digit sales during the festive season, but that clearly didn't happen. Now, if we look at the sales trajectory for the entire year so far, like you did mention, that the growth flatlined at 6 to 9% in the last 11 months. Now, this suggests that there is continued pressure on household spending on account of high inflation. Now, during the festive season, most retailers have indicated that the footfalls were not even equal to the last year. Now, the sluggish sales were pronounced in the low-value categories like apparel, for example, which grew just 6%, then food and grocery, which grew 5%, as well as the quick service restaurants. They managed to clock just 7% growth. Now, over 50% of the retailers experienced negative like-for-like store business. Now, that's really a very negative kind of a sentiment for retailers. The survey indicated that the growth in the high value categories, for example, the jewelry business, they benefited from higher gold price and the increased demand during the latter part of November. Thanks to the wedding season. Now, what are we likely to see going ahead? Well, there is still a lot of uncertainty. However, retailers are optimistic about the upcoming wedding season and, of course, the 2-month-long, end of season sales in the coming months.
Certainly. And in fact, the wedding season, a lot of people have spoken about the number of Muhurat days this time around. Thanks so much, Sesha, for bringing us those details. Let's turn to Life Insurance Corporation of India, where there has been a significant update. In fact, the government has granted a one-time extension to the deadline for achieving minimum public shareholding of 25% for Life Insurance Corporation of India, and it has extended that deadline by a decade. To tell you about this and to give you some context here, Pragati is joining in. Pragati, what do you have for us? Morning.
Morning, Alex. You're absolutely right. Like you rightly mentioned, as of last evening, the government has given a one-time exemption to LIC to increase their minimum public shareholding of 25%. Now, this particular thing is applicable for a period of 10 years, which means that LIC now has time till May 2032. Now, the interesting bit here is that the whole idea that governs this are the SEBI's public shareholding norms, according to which that the entities that are up on the bourses with a valuation of over 1 lakh crore rupees need to have at least 25% of public shareholding within 5 years of going up on the bourses. And now, LIC went up on the bourses in May 2022, and with the exemption now coming in, LIC has 10 years' time to acquire that minimum 25% shareholding for itself. The interesting bit here also is that, Alex, in 2021, the government also exempted public sector entities from this particular norm. That is the SEBI's public shareholding norm. But as of 30th September, that's what the numbers also say, only 3.5% of LIC is owned by the public and the remaining 96.5% is with the government. Another interesting bit here is that, and why that is also a reason why the stock will be on our watch during the day, is that despite a near 40% rally in the stock in last 3 months, it's still away from the issue price of 949 rupees in the IPO that opened in May 2022. So the move is definitely significant and we'll be keeping a close watch on LIC throughout the day.
All right, thanks so much, Pragati, for bringing us those details. Now, quick check on the screens right now for the Asia markets. And in fact, you had 3 early risers in the Asia-Pacific region that opened with modest gains. In fact, the Nikkei 225 was gaining just about 0.2%. It's now gaining just about 1/3% or thereabouts. The Hang Seng is positive. And China continues to underperform. So you have the onshore market in China that is losing ground. It's down about 0.2% or thereabouts. Remember, important data in Japan today, CPI, of course, watched very closely. And as things stand, we're looking at an implied open which is positive for the Indian equity markets, but do expect, as Agam has pointed out, some element of consolidation creeping in. It's been really hard to predict the moves for the benchmark Nifty 50, and it's been very volatile this week. Let's see how it pans out today. For now, it's time for a very quick break on this edition of All You Need to Know. Do stay tuned. Stock-specific action on the other side. Welcome back. You're watching All You Need to Know. It's time to look at the stocks that are likely to be buzzing in trade today. And to tell you about some of them, I'm joined by Himansh Kanwal. Himansh, morning. What are the stocks on your list today?
Good morning, Alex. I've got 3 stocks on my watch list today. Firstly being Tata Motors. The company has informed that it has received a no objection certificate from the exchanges NSE and BSE for the conversion of its DVR or differential voting rights shares to ordinary shares. Now, this comes after the board announced on July 25 the scheme of arrangement to undertake the same. DVRs, so shareholders of Tata Motors will be receiving, shareholders of DVR will be receiving 7 shares, ordinary shares of Tata Motors for every 10 shares held of Tata Motors DVR, which presents a 4.3% arbitrage opportunity, which back in July would present a premium of 23%. The cutoff date is yet to be announced, so do watch out for that. Then we have Moil, where the company informed that its production surpassed 16 lakh tons as of calendar year ended December 20, and this comes after it also beat its previous best of 2019 by 26%. And then you also have the sales numbers for November that stood at 14 lakh tons and have also beaten the previous best. The company last week announced its 51-49 joint venture with GMDC for mining manganese ore in the state of Gujarat. Now, lastly, you have UPL, where the manufacturer of agrochemicals is going to be considering a fundraise very soon. The stock has been under pressure after its performance over the past couple of quarters have seen a declining trend, both in terms of top line and bottom line as well as margins. So the company could, be poised for a revival after the fundraise. But let's wait and watch on that, Alex.
All right. Thanks so much, Imanj, for bringing us those details. 3 more stocks that you need to watch out for, and Mihika has got the details on them. Among them, All Cargo Gati, as well as, I believe, Brigade Enterprises. Morning, Mihika, what do you have for us?
Good morning. So while I do have All Cargo Gati and Brigade Enterprises in my risk, I'll start off with WPIL, which received an order from the government of West Bengal for a turnkey project, and the order is worth around 425.35 crores, and it's for the package 2 of a surface-based water supply scheme in under the Purulia district. Now, the order is to be completed within 27 months, and the company will also operate and maintain the project for 3 years. Now, as of September 30th, the order book of WPIL stood at 4,567 crores, and this consisted domestic and international orders, where the domestic counted for around 82% of the order book. Then we have All Cargo Gati, which has approved a very comprehensive scheme of arrangement, which will basically restructure the businesses under All Cargo and All Cargo Gati, and it's expected to be completed in the next 10 to 12 months, and eventually the All Cargo group will have 4 listed entities on the exchanges. Now, this highlights the international supply chain business will be demerged into a separate entity, which will be called All Cargo ECU, and this will include the India part of the international supply chain business along with the international subsidiaries. Now, the express and contract logistic business will come under All Cargo Logistics, and All Cargo Logistics will set to benefit from the combined synergies, and the shareholders of both All Cargo and All Cargo Gati will get direct shareholding, therefore, eliminating any complex corporate structure. Now, the swap ratio, All Cargo Gati will get 63 shares in the resulting All Cargo Logistics post the demerger, and for every 10 shares held by All Cargo Gati, and the All Cargo shareholders will get a 1:1 shares in the demerged All Cargo ECU, which will be the international supply chain business, and the All Cargo shareholders will continue to hold shares in All Cargo Logistics, and the ratios also take into account the 3:1 bonus shares previously approved. Moving on, we have a Brigade Enterprises, which has signed a lease agreement with Sidwin Cotec India, and it has secured and leased out 54,300 square feet of Grade A office space, which is located in Brigade Deccan Heights in northwest Bangalore. Now, the Brigade Deccan Heights spans around 2.2 acres with 4.3 lakh square feet of development area, and the property is also well linked to the local transport, the metro lines, and the expressway. The managing director also stated in the press release that the northwest Bengaluru part is a fast fast growing space and is sought after area for commercial grade A office establishments.
All right, thanks so much, Mihika, for bringing us those details. Another stock that you'd want to watch out for is GMR Infra, and in fact the National Investment and Infrastructure Fund is going to make a significant investment in the company's upcoming greenfield airport at Bhogapuram in Andhra Pradesh. My colleague Anushi is joining in to give you more details on that investment and what's ahead for GMR Airports. Anushi, what do you have for us?
Morning, Alex.
Morning.
as you mentioned, the investment is about 675 crore, which will take place through company's SPV, which is the Special Purpose Vehicle, GMR Visakhapatnam International. So this transaction will be in the form of CCDs, which means compulsory convertible debentures, and this will mark the fund's second investment of the 3 airport projects it had declared in 2022. Now, with this airport, the company expects about 6 million passengers to be added in the phase 1 and an ultimate capacity of 40 million passengers in the total for the airport. Now, if we look at the stock has been in radar quite a few times this month with an earlier development of the company raising about 3,200 crores through 5 banks and institutions. And also there was 2 large trades that took place with GQG Partners acquiring about 4.7% stake in the company. So this also reflects in the stock performance, with the stock garnering about 28% this last month itself and about 80% of upside this year to date.
Absolutely. In fact, one of the stocks of the year, but there are several of those. Thank you so much for bringing us those details, Anushi. Now, Ami Organics is a stock that you should watch out for, and it was, in fact, quite active in trade yesterday as well. 3 investors have sold a combined stake of over 12% in the company through an open market transaction. Varsha is joining in to tell you more about that transaction. Varsha, who were these shareholders and why is this significant?
Good morning, Alex. So as you rightly said, so there was large deal yesterday wherein 12% equity change hands. Now 3 ex-promoters now under public shareholders have offloaded share for rupees 474 crore. Now share was sold at rupees 1030 per piece. Now if you see the sellers, so Chovatia family has actually sold the shares, wherein Girish Kumar Chovatia has exited the company completely. If you see the buyers for the transaction, you have Morgan Stanley Asia Singapore, who bought almost 2.18% stake, followed by BofA Securities and ICICI Prudential Mutual Fund. Among other buyers were Malabar India Fund, ValueQuest and Goldman Sachs.
All right, but so this is a stock that has gained quite substantially in trade yesterday, and it has been one of the performers. But the question is, what about the fundamentals? What's in store? And there have been quite a few changes with regard to the fundamentals for this company, right?
So Alex, let's first look out how was Q2 FY24 versus last year. So if you see, performance was below expectation due to delayed launch of one of the key products by customer. Although revenue increased 70% year on year, but the EBITDA margin was 14% versus 19% last year. Now this was due to high cost inventory and lower finished good prices, and also fall in export business, which is a high margin product. Now if you see the growth triggers for the company, so one is Fermion contract, wherein they've signed agreement with Fermion, which is a so this agreement is actually 2 additional advanced pharmaceutical intermediates that they're going to make for this company. Also, this is in addition to already signed 2 agreements with this company earlier. Now, the significant contribution is expected by this deal. So this will be a multi-million, multi-year deal, and significant contribution is expected from FY25. Also, if you see, they've entered also into electrolyte business, which is into battery chemicals. So company has signed MOU with global manufacturer of electrolytes. So this was yesterday's news. And also company has also signed MOU with government of Gujarat for investment of 300 crores. Now this is for setting up dedicated manufacturing facility for the electrolyte business in Gujarat. Also, if you see, company has also entered into semiconductor business. Now this is through acquisition of Baba Chemicals. Now this is a niche market, and Baba Chemicals has a strong position in photoresistant chemicals. Now if you see the guidance for FY24, company has actually revised guidance. It has reduced its guidance to 18 to 22% from 20 to 25% earlier. Now this was on the back of, we all know what is happening with this specialty chemical. There's this China dumping happening, which is actually affecting all the companies in this industry. So FY24 for this company may be muted or degrowth, but FY25 will be a good year for this company on the back of the growth expansion that we have seen.
Absolutely. In fact, thanks so much, Varsha, for laying that out for us. And viewers do pay very close attention to that. The entire specialty chemical space, in fact, has not had the best FY24, but a lot of companies are likely to have a much better FY25. Let's talk about Flipkart then, and the fact that it has raised as much as $600 million from its majority stake owner Walmart as the company seeks to shore up its balance sheet ahead of an eventual listing. Rishabh Bhatnagar is joining in to tell you more about that fundraising. Morning, Rishabh. I believe you've gotten confirmation of this fundraising, but no details from the company, right?
That's right, Alex. Good morning. A Flipkart spokesperson has confirmed to us that 600 million have been infused by Walmart, but the company has not revealed much beyond it. But there have been reports stating that this is part of a larger 1 billion round that Flipkart is currently in the market for. And also that it is coming at a valuation of about 35 billion, which is a 5 to 10% premium to the 33 billion that it last raised funds at. There are also a few ACRA filings. ACRA is the Singaporean equivalent of the ROC that we have here in India, and Flipkart is domiciled in Singapore. So there are a few filings there that we are working to get our hands on. That may provide a few details on this fundraise. Alex, why this fundraise is important is because it could very well be the last funding round before Flipkart heads to the bosses for a listing. And what this indicates also is that 2024 could see a lot of new age and tech stocks. We already have Ola Electric coming in. There will be Oyo as well coming in, and now Flipkart as well.
Thanks so much for bringing us those details, Rishabh. Now, we are at the end of this particular edition of All You Need to Know, but there is a conversation in the show that is just after this one about the valuations, particularly in the broader end of the spectrum, and whether, in fact, we're drawing to a close on this upcycle in the broader markets. Now, there have been several market watchers and market participants that have talked about froth in the system. One of them is Equitas Investments' Siddharth Bhaiya. And as we end this show, take a look at what he said about froth in the market. Listen in.
Internally, we have benchmarks as far as returns are concerned. Last 10.5 years, we have delivered close to 34% CAGR returns. And we want to, if we don't find opportunities where we can make 30% CAGR returns for a client, then there's no point taking money. So we don't feel that while we continue to remain very, very bullish on the India growth story, right now we see froth in the markets. This could probably, this probably resembles to me like something like October 1987,